talk to me about how you're watching the price of Bitcoin as an investor.
Well, we had a pretty big trade about just under 2 weeks ago. $2 billion kind of made a move out of Bitcoin into ETH. That might have spooked the market a bit, but for reasons I don't think really matter long term. At this point in time, if you're a Bitcoin investor, even as an individual or an institution, price volatility is baked in. It's just, you got to deal with it. And that's created a new narrative that I'm certainly getting involved in. Is if I have a 5% weighting in a fund of BTC and Bitcoin, and it's just sitting there and it goes through its price moves that it always has, a lot of my other assets, for example, stocks that pay dividends or bonds that pay interest, they sit there and generate money on a monthly basis. Why can't I do the same thing with my Bitcoin? And so a lot of people say, well, that's not the pure reason to own Bitcoin. You want price appreciation, very much like gold. Think about it this way. My two largest positions are BTC and ETH. And there's a reason for that. They're the gold standards, and I've had them since, I took Bitcoin positions on at the beginning. If you want to think about the future of Wall Street, well, Ethereum really matters. And Ethereum matters also because of the Genius Act. I mean, a lot of the transactions that are occurring with stablecoins are occurring on ETH. And so those are the two. And if you actually do the analysis, if you want to be exposed to the price volatility of the entire crypto universe, you can capture almost 90% of it by just owning those two. You don't need anything else. And I'm not saying you shouldn't own other things, but I'm just being pragmatic. And it happens that if you have both, there are strategies by which you can wrap, or other strategies, or staking and everything else that people are well aware of, where all of a sudden your portfolio, instead of just sitting there with price fall, is generating a distribution every month.